Ladies and gentlemen, good day and welcome to the Q3FY22 earnings conference call of Jindal Stainless and Jindal Stainless Limited, hosted by Investec Capital Services. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ritesh Shah, Head Mid-Market Coverage and ESG, Investec. Thank you, and over to you, sir.
Thanks, Stephen. Welcome all to the Jindal Stainless conference call. Trust you and your families are fine and safe. We have with us entire Jindal Stainless management with us. I'll have a quick introduction for them. We have with us Mr. Abhyuday Jindal, Managing Director, JSL and JSHL, Mr. Anurag Mantri, Group CFO, Jindal Stainless Limited, Mr. Jagmohan Sood, Full-Time Director, JSHL, Mr. Ramnik Gupta, CFO, JSHL, and Mr. Gautam Chakravarti and Ms. Shreya Sharma from the IR team. I'll hand it over to Gautam for the call. Thank you. Over to you, Gautam.
Thanks, Ritesh, and good afternoon, everyone. We'll begin this call with a brief opening remarks from our MD and the Group CFO, following which we will have the forum open for an interactive question and answer session. Before we start, I would like to point out that some of the statements made in today's call may be forward-looking in nature, and the disclaimer to this effect has been included in the results presentation that was shared earlier. And now I'd like to invite our MD, Mr. Abhyuday Jindal, to make his opening remarks. Over to you, sir.
Thank you, Gautam. Good afternoon, everyone. Hope you and your families are doing well. On behalf of the management team, I welcome you all to the earnings call for Q3 and 9 months of the financial year 22 of Jindal Stainless Limited and Jindal Stainless Limited. First, I would like to share the key highlights of Q3 FY22, following which Anurag will take you through the operational and financial highlights. Globally, stainless steel prices continue to remain on the higher side due to strong demand and higher prices of all raw materials. In Q3 FY22, for nickel prices went up by 24%, while ferrochrome prices surged by 73% on a year-on-year basis. Now coming to our performance, I'm happy that our strong performance continued in Q3, as well on the back of an improved product mix and the agility to step up exports by harnessing global markets. This is despite stiff and unfair competition from Chinese and Indonesian imports. We continue to remain agile and increase our export share in both the companies on a year-on-year basis from 15% to 26% in JSL and from 8% to 15% in JSHL. We work closely on various government infrastructure projects aided by strong demand from the industrial and construction sectors. We also increased sales of our special grades such as duplex, super austenitic, and checkered plates. Due to semiconductor shortage and moderate two-wheeler demand, it resulted in a slight dip in the automotive segment supplies. The pipe and tube segment also witnessed a minor decline owing to lower than expected market demand and higher raw material prices. The railway segment, on the other hand, has done well on an overall basis, and we maintained our strong hold in the lift and escalator segments as well. Sales volume in the specialty product division rose by 32% year-on-year. We have recorded highest ever total sales in the blade steel and precision strip segments during Q3 FY22. I am glad to share a few other significant developments. The credit ratings of both JSL and JSHL improved to AA- to high degree of safety as a result of accretion from prudent financial management and focused deleveraging. In December 2021, we launched India's first hot-rolled ferritic stainless steel checkered sheet with the brand name Jindal Infinity. This is our second foray into the branded category after the launch of Jindal Saathi, the co-branded stainless steel pipe and tube products. Jindal Stainless will be supplying approximately 2,000 metric tons of stainless steel for the recently inaugurated Kanpur Metro. The scope of this metro project includes design and development of 201 coaches, with each coach consuming approximately 10 metric tons of stainless steel. It also gives us pride to share that we are among the top few companies in the world that can supply 2J and number 4 finish required for metro coaches. There has been a progress on the merger front as well. The Honorable NCLT Chandigarh bench has heard the first motion petition and reserved its order on February 8, 2022. The detailed order mentioning the date for convening the meeting of shareholders and creditors is likely to be received within 2 to 3 weeks. On the project side, I would like to assure you that all our brownfield expansion projects announced in Q1 FY22 are proceeding as per plan. I would now like to highlight one key concern, which is the subsidized imports and dumping. The impact of suspension of CVDs on stainless steel products from China and Indonesia in the union budget has been damaging for the domestic industry. The first 9 months of FY22 witnessed an 84% increase in stainless steel flat products volumes compared to average monthly imports in the last fiscal year. Chinese and Indonesian imports increased by 230 and 310% respectively on a year-to-date basis in FY22 as compared to a monthly average in FY21. The revocation of these duties was again upheld in the recently announced budget of FY22-23 for the apparent reason of containing high prices of metal. But as you know, stainless steel prices are a function and are thereby reflect the increase in raw material prices. Keeping the interest of domestic customers in mind, we have not passed on this price increase entirely to them, and therefore the Indian price increase is lower than that in US and European markets. However, going forward, the decision to continue suspension of these duties will have an impact on the domestic industry. Moving on to another strategic focus area, I assure you that we are constantly working on reducing our carbon footprint. We have been putting in a lot of efforts towards initiatives such as steam generation from waste heat, use of byproduct coke oven gas, reclaiming effluent water, recycling high volumes of steel scrap, and deploying electric vehicles for induction. We intend to integrate a robust ESG and net zero strategy framework in our overall corporate strategy. As testimony to our efforts, JSHL won the Golden Peacock Award for Energy Efficiency for the year 2021 and also received the National Safety Award organized from the Ministry of Labour and Environment, Government of India. With this, I would now like to hand over to Anurag to discuss the operational and financial performances. Anurag?
Sorry, I was on mute. Thank you, Abhyuday. Good afternoon and warm welcome to everyone joining us on the call today. We have shared our investor presentation with the stock exchanges, and today's calls and discussions will be on the same lines. As can be seen from our operating performance, the strong momentum continued in Q3 FY22 as demand in most of the segment have been good, such as the process industry, railways, specifically coaches, metro, infrastructure, and lift and elevator segment. Higher sales of specialty products are encouraging for our business. Improved product mix attuned to the market demand has been helping us to remain agile and responsive to the customer requirement and also tapping the export market in a swift manner. Exports have as Abhyuday mentioned, exports have gone up in both the companies. Pro forma exports volume increased by 50%, i.e. 21% of the total sales in 9 months for 9 months ending FY22 versus 14% in the corresponding period in FY21. So there is a good 50% jump in the exports volume. Let me now take you through the key operational and financial highlights of the quarter. On a year-on-year basis, pro forma combined revenue and EBITDA grew up by 48% and 58% respectively to rupees 8,880 crore and rupees 1,261 crore. On the TTM basis, the pro forma standalone combined revenue grew up by 52% over FY21 to rupees 29,136 crore EBITDA rose by 80% to rupees 4,329 crore, while PBT grew up by 190% to rupees 3,488 crores. For the 9-month FY22, the pro forma combined revenue, EBITDA and PBT stood at rupees 22,896 crores, rupees 3,444 crores, and rupees 2,786 crores respectively. Happy to share that our operating subsidiaries also continue to perform better, and the combined EBITDA of all the operating subsidiaries grew up by 59% on year-on-year basis to rupees 114 crore in Q3 FY22. For 9 months FY22, the combined EBITDA of the operating subsidiaries have more than doubled over the previous year to rupees 275 crores. As Vijay was mentioning, the raw material prices continue to remain on a high level, which is reflected in our average realization. The average prices of LME, nickel and domestic ferrochrome in Q3 FY22 increased by 4% and 2% respectively over Q2 FY22. As on 31st December 2021, our pro forma combined entity net debt stood at rupees 3,372 crore, down by 29% as against March 21 level. As we have been saying, we have maintained our leverage ratio on a prudent fashion. The pro forma debt equity and debt EBITDA ratio stood at 0.4x and 0.8x respectively. With the fall of our borrowing rates, the combined interest cost stand reduced by 40% and 49% in Q3 and 9 months FY22 to rupees 94 crore and 253 crore respectively. Interest continues to low at 1.1% of our revenue for 9 months FY22 for the combined entity basis. Focus on financial prudence will continue going forward. As mentioned by Abhyuday, our credit ratings, about the credit rating upgrade, I am pleased to share that major credit rating agencies have consistently been upgrading our ratings. For both entities, all the major agencies like CRISIL, CARE and India Rating Fitch have upgraded our ratings to AA- for the long-term facilities, while reaffirming the highest rating to A1+ for the short-term facilities. There has been a 5 notches improvement with almost a 2 category band change from BBB in a 1 year's time. Significant improvement in the business risk profile, operational and financial performance, strong liquidity, improvement in gearing and deleveraged balance sheet, culminating in reduced finance costs have been the key reasons behind these consistent upgrades. Our focus will continue to be an improving product mix and agile business strategy. The ongoing expansion projects will bring about further economies of scale. Government thrust on higher capital expenditure, logistics and infrastructure development will boost demand for the stainless steel going forward in the domestic market. On this note, I would request the moderator to now open the floor for the Q&A session. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Yeah, hi. Good afternoon, everyone. Thanks for the opportunity and congratulations for a great set of numbers yet again. I have 2 questions. The first question is essentially on, this is the oft-repeated question I have on your EBITDA margin. So EBITDA per ton, if you look at it, it is almost touching 30,000 now, 29,000 plus. So would you, and given the outlook on the stainless steel prices, would you increase your guidance at this point in time? That is my first question.
Okay. Hi, Amit. If you see on 9-month average basis, our EBITDA per ton which we have achieved is in the pro forma entity level is 27,214 crore. Now, for FY22, surely given because 3 quarters have passed and given these type of trends, we are confident that we will be ending the FY22 with around the same number as against the guidance which we given you last time was for 24 to 25,000. So effectively, at FY22 guidance, we are increasing to almost to maintain almost the same EBITDA levels around the number of at 9-month FY22 average level. Now for going forward, because we have seen so many fast-paced development in last 2 years' time. At this moment, and that's the reason we depending on certain trends and consistency, we have maintained the average sustainable guidance of 18 to 20,000. Because as you may appreciate that this will depend on many things in the raw material price, continuous raw material price movement, global scenarios, and so it's a bit early to comment on the upgrading the long-term sustainable guidance. So short term, we are increasing it to say from 25,000 to 27,000. But long term, at this moment, we will still maintain that sustainable EBITDA of 18 to 20,000, which is healthy for our business models and even for our rating agencies and everything. They are happy with those type of numbers to maintain. But having said that, yes, whenever as you have been seeing, whenever the opportunity exists, we would like to be very agile to capture the best of the value from the market.
Okay, that is helpful. The second one is on essentially, what we have seen, there has been a series of dilution of protectionist measures as far as stainless steel industry is concerned. And this has started, so I think it has been continuing for the last 1.5 years now. And given that we are expanding capacity right here, when, protectionist measures are diluting every day. So I just wanted to understand, first of all, how we are working with the government to ensure that our interests don't suffer. And are we targeting export markets more for our increased volume?
So yeah, Amit, I'll take this question up. So definitely, we don't see a challenge. We see stainless steel demand in all sectors that we are present in growing quite steadily. With infrastructure coming up quite fast, railway has announced good projects, metro projects coming up. Secondly, what we have done to counter this is also increasing our exports. And that is what we're gearing towards because we're planning to build a very strong team up in the US market. We already have a good team in the European market we're further planning to strengthen. So that way, any eventuality that we see coming in the domestic front, we are always geared up to export. And also another thing that we're trying to tackle through this import is increase our ferritic series segment. So that we are very competitive, and there are both China and Indonesia don't export a lot of 400 series. So that's another strategy that we're working towards to grow in ferritic segment.
Wonderful. Actually, just wanted to understand, because we are increasing our volume, and so does export give you better realization than the domestic one?
Exports currently definitely has, and we see that going forward also will have better realization.
Okay, wonderful. That's very helpful. Thanks and all the best.
Thank you, Amit.
Thank you. The next question is from the line of Rajesh from B&K Securities. Please go ahead.
Hello everyone, and congratulations again for a good set of numbers. So I had 2 questions. One was how should we view the inventory gains for this quarter? And second part of this question is that we've seen a movement of nickel by nearly 15% YTD and a fall in ferrochrome of a similar amount. I'm just saying around ballpark. So how should we look at these numbers in terms of the raw material inventory price change for this quarter?
Hi Rajesh. As we've been explaining that this is we call it more as a positive inventory valuation and negative inventory valuation. This is more because with the trend, the movement, the way the raw material prices keeps behaving. So technically, in a continuous uptrend, there would always be some of the positive gains which will be falling, and also because of the market buying sentiments, because in the upward trend market. And it's a vice versa case in a downward trend. It happens when the downward trend, when obviously sometimes the destocking happens for 2-3 months and there will always be a pause. But it's very difficult to actually de-signal, as you know, all the raw material prices keep behaving in a different fashion. So it's difficult to break down the EBITDA on those levels. We would say that these are inherent part of the value chain, and what we are doing is at our front is that we are doing a very strong risk mitigation to keep not have a very large underlying commodity exposures. And so we will not have a phenomenal gain, neither will have a large sort of losses in terms of both the sides.
And so, do we have to pass on the price reduction in ferrochrome in terms of price reduction in the products we applied? We've seen a pretty sharp fall in ferrochrome prices on a quarter-on-quarter basis.
It's I would say the basket of raw material prices which determines actually goes into the final price of the final product. So because it's not only the raw material price, then accordingly the international prices also gets adjusted, the landed price, the dollar rupee. So it's a combination of that. But to answer your question in a whether directionally raw material prices get passed down, the answer is yes. It's not that possible to do that because the grades are so varied, and even some of we have to take into consideration all the raw material into the picture. So accordingly, the prices we announce the final product prices.
Okay, so I just wanted to get a hang of, how what is the kind of scenario of so these are the two key raw materials, nickel and ferrochrome, more or less. What is and scrap, which is not that volatile. So how should we look at these things in terms of the future guidance you're giving? Like, will a sharp fall in nickel affect our margins more, or a sharp fall in ferrochrome?
Depending on the mix, I would say, because the high nickel bearing series, sharp fall in nickel and that specific consumption pattern, the impact will be more on because the buying pauses for some time, because at least but
it's always a very short-term impact that this creates. Then market settles itself eventually. So only absolutely Anurag is right. When the prices are falling, that is the time when there is a bit of an impact, but it settles down eventually. And we are quite agile enough that if we see a sharp reduction in either of our raw materials, we can always switch to CDs, which consumes less of those raw materials to counter that.
Okay, thank you. So my second question is just on the merger. Where is the NCLT meeting expected? I know it's not in your hands, but any idea on that?
So Rajesh, merger, as Abhyuday mentioned in his opening speech, there has been a good progress, and just 2 days back, the Honorable NCLT Chandigarh bench has heard the first motion petition and reserved its order. So on February 8th, this development has happened recently. Now we are awaiting the detailed order mentioning the date of convening and further convening the further meetings and the processes. So at least the process has moved a step forward. And now, post this, all the routine processes will start, which is the NCLT appointing the chairman for the various meetings, serving notice on the regional director, ROC, official liquidator, IT, etc., which are more process, but it all will then take probably another 6 to 7 months. But good thing is that at least this NCLT bench was not taking up the routine matter earlier, and they were focusing only on the very critical and liquidation matter. So at least our case have been now heard, and they have now moved forward.
Okay, thank you so much. I'll join back in with you.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Systematics. Please go ahead.
Yeah, hi. Thanks for taking my question. So I had a couple of questions. First is there is an account gain from in one of your subsidiaries of 160 crores. Can you explain what is that? 146 crores in the Jindal Southwest Holding abridged in the presentation.
So you are referring to the JSHL consolidated result?
Yes, yes.
Yeah, so this is not the gain it is there. So if you look at the standard perspective, when the because this JSHL has made the investment in the JSL and JSL is treated as an associate company in the consolidated book of JSHL. Whatever the profits which JSL consolidated get in terms of presented in the JSHL consolidated result as an associate profit. It is not the one-time gain, it is a profit from the JSL, which has been reported in the consolidated result of JSHL.
Right, so nothing to do with the Indonesian subsidiary, right, over here?
No, this is not the Indonesian, this is the consolidated results of the JSL, which get as an associate adjustment in the JSHL results, because this has been shown as the associates of the JSHL. Because they have a stake of 33.37%. Yeah.
Right. And sir, we have seen a debt increase QOQ. So this is temporary, more to do with the high nickel prices and things like that. And should we expect a release in the fourth quarter?
See, Rahul, this slight increase is primarily because of the higher working capital, largely because of higher working capital debt. Because as you can see that the prices have moved up considerably in last almost 6 to 9 months. So commensurate, it's not even commensurate that we have still tried a very tight control on the working capital, but obviously this is some of the debt increase is largely because of that. Now Q4 also it may not get paid because we are seeing a continuous trend right now. So it's difficult, at least at this stage we are not seeing that this will get released immediately in Q4 because nickel and other raw material prices have moved up further.
Right. And sir, can you give the capex number for next year if you have finalized? And so far, how much have you done?
So capex, what we said is that in the 2 financial year, it will be close to 1100 to 1200 crore spent in each financial year, and this is what we are doing. And in terms of the capex done so far, I would say because it's a combination of cash spend and LC, so almost 70% to 75% is already committed. The cost has already committed.
Right. Thank you.
And
I'll come back.
we are seeing it on track. So maybe
on track, right? So you are targeting 3Q commissioning, right?
Yeah, Q3 and Q4 as we given the various project date, Q3 and Q4, we are well on track on that. In fact, as we announced last time, SPD in Hisar, which we doubled. Actually, that project we commissioned we announced in last quarter, and it's ramping up well. In fact, today we have reached to almost 70 to 80% capacity utilization on the combined basis for the full capacity.
Right. Thank you so much.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yes, thanks, Stephen. Couple of questions. Sir, in the initial remarks, you indicated we have not fully passed on the raw material prices locally. Just trying to understand the thought process behind it.
So it is only to counter the imports that are coming in from China, Indonesia. So only for that front and to give the government also a clear indication that we are there to support the domestic industry.
Okay. You did indicate basically we are trying more on US as well as on the 400 series. But if one had to understand our product mix locally for both the entities put together, where do you think, where should we understand is the more damage from the imports? Is there a particular segment which is being hit more? And how should one understand this?
So the biggest segment that is actually being hit from imports is an area that we are not big in. Mostly is the utensil sector where imports come in from China, where we have only maybe a market share of 7 to 8%. So it's not such a big impact. It is more on the sentiment that it gives the negative impact.
Okay. So when we say not pass on the full raw material prices, it is only pertaining to the 7 to 8%, not beyond that.
No, that is for the whole market in general. But mainly that where the imports are coming on is in the utensil segment.
Okay, sure. So secondly, you indicated export realizations are higher. How should one make sense of it when one looks at it a profitability standpoint? And if you could give a broad color on which all regions do we export to? Basically, is Europe a major one, or any particular regions or continent that you would like to highlight?
Yeah, region I'll take up. Anurag, realization of that question. So main market for us is Europe. Highest volume currently is in Europe. But we are seeing US market demand is picking up very strong. Demand for our products is also picking up very well. So we see in the next couple of years that US could become a stronger market than Europe. But as on today, Europe is our biggest market to export to. And in Europe, mainly Germany and Italy.
Okay. And sorry, go ahead, Vijay. You.
Yes. So, I had a related question. Basically, Anurag sir, when you answer, I think in September we had affirmative duties which were imposed on both India as well as Indonesia by Europe. And what I see it, the duties against both the entities in India for Jindal Stainless and Hisar, it's nearly 13.9%. And this is higher than IRNC, which is 10.2%. And all other companies over there, it's 20.2%. So how should one look at it from a profitability standpoint, given this affirmative duties are already in place? Like, has it impacted our volumes, profitability? How should one understand that?
Okay. So see, as you mentioned the duty, technically we are probably one of the lowest duties in EU actually. Most of the other companies have almost 20%, and ours have been because we are not doing the undercutting of the prices, because after the detailed investigation these numbers were arrived. So, and despite this, because of our quality and the timely commitment, we have been, as Abhijit was mentioning, we have been able to swiftly ramp up the export whenever we see the value opportunities in those markets. So Europe still continues to remain our key market, and the US we are ramping up very fast now because there is a good demand improvement in US and besides Russia and other geographies. So I don't know what your question is, whether we have been able to export in Europe with this duty.
No, we are able to export, but is it at a lower profitability than we used to have it earlier?
See, as Abhijit was mentioning, we will always give preference to the value.
Not at this point of view, not at this point of time, only because prices, all raw material prices are quite high. And demand in every industry in every country has picked up. So at this point, the duty is easily being absorbed with higher realization.
Sure, that's helpful. And lastly, on the cost side, how should one look at the scrap sourcing strategy given we are expanding new capacities? How is it that we are placed on the sourcing for scrap? And is there a way to understand scrap metal spreads? Any flavor that you can provide over here which can actually help us understand the profitability better?
Yeah, I think Mr. Sood can take that up.
Yes. Yeah, I will take this. Yeah, Ritesh, in recent time, the scrap as a commodity has not actually, shown any relent. It has consistently gone up. And as the nickel is going up, as everything is going up, the scrap is also going up. On the one hand, the import prices, the prices of the 300 series from, Indonesia and China, they are going down. But because of the strong demand in the European Union and US, the scrap is consistently performing very well, and it is basically on the high bracket. Okay, now to basically, on the cost front, how to manage our costs? Yes, what we are doing, we are, slowly reducing our buying from the far-off market, which is basically European Union and US, and we are consistently localizing the sourcing. We are continuously buying more and more scrap and raw materials from nearby countries or the domestic market, which is giving us leverage in terms of not only cost but also exposure. This is what we have strategized in terms of scrap sourcing.
So would there be any quantifiable number over here on how the scrap spread has moved for any particular grade?
Okay, but if I could give you in 3 or 4, in the past couple of months, it has moved up almost, in tandem with the nickel prices. Okay, so as the nickel LME has increased, the scrap prices have also increased. Okay, it has moved up almost by, in last couple of months, almost by 30%.
Sure. I have more questions. I'll jump back with you. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Nishit Shah from Equitas Investment. Please go ahead.
Good afternoon, sir, and thank you for this opportunity. Sir, last few weeks, what I've read is that there is some shortage of coal and some companies are not getting railway rate allocation. So are you also facing this issue?
Yeah, Mr. Shah, I will take this question. Yes, it is very much a industry problem. Coal is in short supply, and every other industry which is using power, energy or coal in big form, they are facing the heat. If you talk about Jindal Stainless, so far we have not been able to get affected by these rising in coal prices because we are actually buying this coal from Coal India, which is on the basically LTL basis, long-term lease agreement basis. Okay, and going forward, we are quite hopeful that we will be able to or continue to buy from the local sources. We shall not be have to get into the import market. We are very much sure that we will be able to source from the local market, and our profits will not be hit by this.
Okay, and about the railway rates?
Rake allocation is definitely an issue. Rake allocation is preferentially being given to IPPs, not the CPPs. Captive power plants, basically they are given the last priorities. We have already taken up this issue with the MCL and CIL, and both have assured that rake allocation going forward in next couple of months will be reallocated for CPPs. We are quite hopeful. The assurance has been given by the coal minister as well.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Ritvik Sheth from One Up Financial. Please go ahead.
Yeah. Hi, good afternoon, and thanks for the opportunity. So few questions from my end. Firstly, you mentioned a couple of times during the opening remarks and even in the Q&A that demand is strong in Europe and overseas despite higher prices. So in these markets, what would be the average growth rate that we are seeing? And second question to the export market is that you said that USA will be a key export market in next 2 years. So will it be at the expense of Europe, or it will be over and top of what we are already doing in Europe?
Okay, so in these export markets, stainless steel world average is growing at about, I would say about 5.5%. These markets is growing also around that 6.5%. Domestic market is growing around 8 to 9%. Secondly, to your second part of question in terms of volume, it will be over and above the European export because we are expanding as well. So we will, over and above our European export, will export to US.
Right, sure. Okay. So eventually for the merged entity, would it be a reasonable assumption that exports could inch up in the high 35% range over the next?
Yes, we do see that. We do see that in the next few months, quarters actually.
Okay, in the next few quarters. Wow, that is encouraging. Okay, and like steel, would stainless steel be the highest price in US market?
Yes, you are right. US is the highest price market.
Okay, great. Okay, so that will just add to the margins going forward.
Correct.
Okay, and on the domestic front, what is the opportunity for railways, metros, and infrastructure related what would be the percentage of total sales volume in the current year, and where do we see it going over the next 3 years?
Exact numbers, Mr. Sood, would you have?
I would, yes, definitely I can pitch in here. Mr. Seth, as you would notice that during the recent budget, the Finance Minister announced Gati Shakti project. Gati Shakti is consisting of various platforms where it is around railways, it is basically mass transportation system, it is around other things which require huge quantity of stainless steel. So having said this, or having launched this Gati Shakti, definitely gives a boost to stainless steel uses. So we see a very good demand of stainless steel coming up.
And also the positive thing is there are only 2 approved sources, Jindal Stainless and Salem Stainless Steel, that are approved to supply to railway metro projects. So any growth coming in will directly impact us.
And moreover, we are actually approved by all global vendors, including Alstom and Bombardier and everyone, unlike any of other competitors.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may be requested to rejoin the queue. The next question is from the line of Ashish Kejriwal from Centrum Broking. Please go ahead.
Yeah, hi. Thanks. Good afternoon, everyone. So my first question is, in last 9 months, how much working capital has been blocked in our Concall numbers, and what is the capex number which we have spent in last 9 months?
See, almost if you see, as I'm mentioning, is that because of very high raw material prices, the working capital was close to 3,000 crores increase because of our turnover has also increased, both volumes and as well as the prices have also increased.
Mm-hmm. And what about the capex?
Capex, as I said, it's around 70 to 75% have been committed. Now the cash flow payment will keep starting in a phased manner because there are LCs, there are advance commitments, so accordingly.
So that's what I said. What's the cash flow impact of capex in last 9 months?
So maybe Ashish, we can work offline with you on the cash flow. We can help you understand the full cash flow. Maybe Gautam and Shreya can do that.
Sure. And sir, second question is, obviously till now we are able to pass on the continuous price hike or raw material price hikes. But do you think that we'll reach to that stage that any further price hike will start impacting demand, especially in India?
See, as I explained, is that it's a matter of not only the prices, because it's the price of end product depends on the multiple factors, the international demand scenario, international prices, the forex landed price of the in the country. So as far as the global demand and the entire supply chain remains on a buoyant mode, typically we've seen that it's a continuous way. When the other way reverse starts happening, that also, as we said, the global, at least the domestic demand, we are not seeing any of the challenges. So that even if sometimes the buyer pauses for some time, where then when we can drop the prices or we don't drop the prices, but in either way, it's not the maximum the buyer can hold the buying is probably maybe 1.5 to 2 months, because people don't keep the stock beyond that. This we have seen in last 10 years, we have seen this consistent trend whenever the price. So as we mentioned that as a risk strategy, we are maintaining it in a more prudent fashion so that both sides we remain protected within the range.
No, sir. My question was not at company level. My question was at a macro level, that are you seeing that demand can start getting hit because of such high prices?
Yes, so you want to answer?
Well, I don't think so it is, because see, demand is fairly basically tapped up by series of schemes launched by government, and there is a continuous spend on the OEM infrastructure and all those things. So we definitely feel the demand is going to be there. And as West European Union and the US, it is showing it is continuously to be into the higher spectrum. So China also, after opening up after this Winter Games, probably will add on to this. So in long-term basis, I don't think demand is going to come down. It will not have any impact of the raw material prices or any other thing.
Okay. So you mean to say that even if stainless steel prices sustains at this level, we are not seeing any hit on the demand even in the short to medium term?
I think so, yes.
Okay. Thanks, sir, and all the best.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Good afternoon to the entire team for a sustained very strong results and good guidance. Overall turnaround, what you have done for the company is excellent job. Creating wealth for all investors. Yeah. So a few questions. First on slide number 25 of the presentation, the project, the capex and the timeline what you have given. Can you run through which all equipment have been ordered, which is on site, and how about you're going about each of the segment of the capex? What you have mentioned? You have mentioned the timeline, but which civil work is started, which equipment is ordered, which is on site? If you can throw some light on that.
See, Bhavin, the two things which we can assure you, I think, I think Mr. Sood is running this project and have a confidence with them that we will be delivering this timeline. In fact, SPD timeline, we have delivered it much ahead of time. And that's why we are assuring you at this point of time, it's not very far away. Q3 and Q4, which we committed, we will deliver it on time. 70 to 75% costs have already been committed. So both in terms of timeline and cost-wise, we are well in.
Okay. Since you were looking for, how much civil has been completed and how much equipment has arrived or how much we have constructed, so we'll give you item-wise. As soon as we have completed almost 80 to 90% of civil work and almost 20% of the equipment has started arriving. And we are well on time, well ahead of time actually here. In the CR combo line, we have completed almost 60% of our civil and part equipment has started coming into the site. And here also we are well on time. On the ferrochrome, we have already, Shreya, can you just, because I just wanted to see. So on the ferrochrome front also, we are well on time. The equipment has been ordered and the civil work has started. It has just started, okay? And on the JSHL front, on the prison strip, the first phase has already been commissioned. That was well on time. Yes, though there was some hiccup because of, the second wave of COVID, we were very badly hit. The entire country was badly hit. So here also we had a kind of hiccup when there was a delay of about a month. But then we are well on time in terms of commissioning. We have already attained 75% of, total estimated capacity, which we have wanted to, enhance. And quarter one or maybe just in the starting of quarter two, we will be able to achieve 100%. And on the phase two, we are again well on time. We have ordered the equipment, civil work is going on. And for blade steel, phase one, phase two, both the items, both the things, orders have been completed. Civil work is almost 80% completed. And we are here also, we are well on time.
Sure. So good to hear that. This addition, this steel melting shop, this is on a single go you are adding 1 million ton, or is
Yes.
Is there a phase to that?
No, steel melting shop we are adding in Jajpur. It is just in the same bay, same area, and it is 1 million ton we are adding, 1.1 million ton we are adding, okay?
Great. Okay. And out of this 2,600 crores, what would be already spent and what would be spent in FY22?
So, Bhavin, I would say that, okay, we just answered this question earlier because in the interest of time, because Abhyuday has to leave at 4 o'clock, so I would request participant to have a strategic question first. Any of the reconciliation and financial number, we are happy to sit with you separately.
Sure. Thank you.
Thank you. The next question is from the line of Sahil Sanghvi from Monarch Network Capital. Please go ahead.
Yeah, good afternoon and very much congratulations on excellent numbers. I just have two questions. First, on the export side, just wanted a comparison on the profitability. How are we placed as compared to the domestic sales that we do, maybe on EBITDA per ton basis or any kind of ballpark number on percentage basis? Could you help me on that? Could you provide some kind of idea on that?
No, I think, split-wise, we don't give the EBITDA per ton number because ultimately, as we have been saying, we are working on a very agile and flexible model. So, and we try to capture the best of the margins from whichever market and whichever geographies we get. So, if sometime we have seen in the past, our export actually just same quarter last year was just 8%. Today, in last quarter, we did a 14%, almost double the export. And this is because when we saw our domestic market giving us the good margin, then because the logistic challenges were there earlier in the international market, we immediately increased our uptake in the domestic market. So that's why we always say the blended basis because those is actually we want to remain very flexible and agile and give the more a shareholder value in a holistic manner to have a blended EBITDA per ton.
Right, sir. But it will be higher. Could you give that at least? Would it be higher than the domestic number? Because there is a freight also involved, so just wanted an idea.
As Abhyuday mentioned that right now, export markets are higher.
Okay. And my second question would be on the imports that are coming. So at what point can it actually affect our business? I mean, I understand that the product that are being imported is different, but I mean, are we shielded perennially, or could there be a point where the imports can start affecting our business?
No, we don't see that affecting at any point because the imports coming in are very low quality products in very low quality segments, which is not Jindal Stainless's focus area, focus segments at all. So, and that is where China, because China's, Indonesia's whole strategy is homogeneous, low quality, low grade products, and that is why it will not impact our market at all. And we are agile enough, like we've discussed multiple times, to export also, and we cater to all industries possible.
Got it, sir. Got it. Thank you very much and all the best.
Thank you.
Thank you. The next question is from the line of Chetan Shah from Abacus Asset Management. Please go ahead.
Yeah, hi. Congratulations on a great set of numbers. I just have two quick questions for Mr. Abhyuday. Sir, if I want to look at a combined company from 3 to 5 year time horizon, I just wanted to understand on a two-part. One, what is our big picture aim? You discussed this in the past from a capacity and a size point of view, but from a raw material and also from a key strategic input point of view, how do you want to kind of safeguard ourselves as an entity, as an organization? If you can give us your thought behind that. From two count, one, nickel, which is one of our key raw material, and second, the scrap. So if you can give some color on that, will be very, very helpful, please.
So good. Definitely I can take this up. So raw material and backward integration is going to be a key focus area for the organization going forward in the next 3 to 5 years, because after our expansion for another 1 million ton of stainless steel, we will be quite comfortable meeting the demand requirements of the country. So we definitely now want to focus on backward integration. In terms of a lot of projects are in the pipeline right now, which is too early to discuss, but we are in discussion with all our major suppliers. We have already convinced them. Some of them have already set up yards very close to our factory. So that will really help us in managing our inventory and our cash flows as well. Similarly, we have our own yards, and we're planning to open our own catchment yards in various parts of the world, which will further strengthen our positioning for scrap. And we are in talks, which is a little too early to see, and to explore some nickel projects in Indonesia. So that is still at an early stage, but it's going to be a key focus area for the organization going forward.
Thanks, Abhyuday. But just one, my apologies for repeating this question multiple times in the past. But as your big picture vision, could you just tell us that how do you want to see this company in next 3 to 5 years? Is 5 million, 3 million is the first stage, then 5 or a 10? Because India is one of the very integral and important part in terms of the growth going forward, and also the export opportunity which we are seeing in a neighboring country and also in Europe and USA, which has been discussed in last 45 minutes in a call. So just from your point of view as a owner stroke promoter of the company, if you can give us some color on that to get a sense that where do you want to see yourself or a company in next decade or so, or 5 years or so. I know it's to a larger picture, but just being a shareholder, we want to
5 to 10 years
view.
becomes a larger picture, but definitely, we want to maintain definitely in the next, I would say, coming decades also, want to maintain and further grow our strength in the stainless steel domain. We see that really being an industry which has been lagging behind only due to the lack of knowledge, and with that increasing, with the kind of policies also helping to increase stainless steel, there's going to be a very bright and bullish future that we see. So definitely we want to maintain our leadership, in that area. Then now that the company has financially become very strong, any strategic assets that will be coming in place in the future, that also the organization will be looking at. So now, and as a corporate itself, we really are working towards the ESG front. Stainless steel already has a leg up in that race because of we are 100% scrap recyclers. So, these are the major topics that we want to work. We want to become a responsible corporate as well, further improve in CSR projects that we're doing, really make our country Atmanirbhar. It's really difficult to say 5 years forward, but at least for the next 3 years, these are our clear vision and these are the clear areas that we're going to work towards.
Thank you so much, and congratulations and best wishes for the time to come, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we take one last question from the line of Navneet Bhaiya, an individual investor. Please go ahead.
Hi, Abhyuday. Hi, Anurag. Congrats for the great results. I have 2 quick questions. Your volumes in JSL average about 250 to 255, whereas your capacity is about 275 per quarter. So I just wanted to understand, is 90 to 93% the peak capacity that you can reach, or can it actually go up to 100% as well?
Maybe Mr. Sudbon can answer this.
Okay. Sorry. Yes, Navneet, definitely it can be ramped up to 100%. Yes. 93% is because certain constraints from product mix side, from other things. But definitely, just to answer your question, it can be ramped up to 100%.
Okay, great. And second question, if you can, so given the imports and exports from India is increasing, both ways, can you give some idea on, what global capacities are being set up? We know the India bit already because you are the major player over there, but globally, who else are setting up capacities and what is coming up in the next 2-3 years?
Yeah, Navneet, the global capacities, whatever they are coming right now, are in Indonesia. Okay, so maybe in next 4 to 5 years time, it is going to add up almost 5 to 6 million tons. Whereas in carbon steel, China is slightly reducing, but India is increasing. So the capacity balance will remain same. From Indian parlance, if you just see, India is set to grow from 110 million ton in carbon steel, I'm talking, to about 300 million tons by the year 2030. Going by any thumb rule, stainless steel market is almost 2.5 to 3% of the carbon steel. So today we are having a market size of about 3 million ton. If the stainless steel if the carbon steel grows from 100 million to 300 million ton in next 7-8 years, stainless steel is also set to grow by that number. So we definitely look forward to a very bright future going forward. So by 2030, we definitely see a number 8 to 9 million. for stainless.
Okay, so the Indonesia capacities that you were mentioning, do you see the global demand supply dynamics to remain favorable over the next 2-3 years, or the supply can overshoot the demand in the next 2-3 years?
I think it is going to remain favorable because certain less efficient units are going to, phase out, majorly in China. So probably it is going to remain same and favorable.
And India is the largest growing market. And India is demand side. India is the fastest growing stainless steel market globally because our journey have just started for stainless steel.
Understand. And my last question, Anurag, to you is you've taken approval for a 7,000 crore debt raise across both the companies, 3,500 each. So any specific purpose, or it's a generic approval for now?
Yes, okay. So let me just first clarify. It's not aggregate 7,000. It's 3,500, and it's a more enabling resolution, and it's in both the companies because we may go in some of the market as a co-borrower because now the merger is already on the card. So both the entities, but overall we have taken an enabling resolution at a merged entity level of 3,500 crores. Which is for some of the refinancing as well as some of the general corporate purpose, long-term working capital, and some of the new partial capex purpose. So that's the more enabling to tap the new instruments in the market. And it's not 7,000; it's only 3,500 crore because JSHL we have taken approval as a co-issuer.
Understand. Okay. Fair enough. Thank you so much, and all the best.
Thank you. I would now like to hand the conference over to the management for their closing comments.
I would like to thank everyone for attending this call. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarification or would like to know more about the companies, please feel free to contact our investor relations team. Thank you once again for taking time to join us on this call, and please stay safe.
Thank you. Ladies and gentlemen, on behalf of Investec Capital Services, that concludes this conference. We thank you all for joining us, and you may now disconnect your